Those were the headlines that we're tracking for you this evening. But on what's brewing today, EdTech unicorn Byju's has raised $250 million in a fresh funding round with participation from existing investors, including Qatar Investment Authority. Byju's, which counts Sequoia Capital, Tiger Global, Tencent, Naspers, General Atlantic and Lightspeed as its investors, hasn't disclosed the complete list of backers in the new funding round, last valued at $22 billion. What also remains unknown is the valuation given to Byju's in this round, although a source did tell Money Control that the funds were raised at the current valuation. Now, the fresh capital infusion comes soon after the company announced plans to lay off 2,500 employees across teams while enlisting a slew of optimization measures to hit profitability by March 2023. For FY21, Byju's losses widened by nearly 20 times to 4,559 crore rupees, the worst bottom line figure among all of India's unicorns or startups valued at $1 billion or more. Now, the startup's founder and CEO Byju Ravindran said in a statement, and I quote, "Byju's is now at that sweet spot of its growth story where the unit economics and the economies of scale both are in its favor." He further added that regardless of the adverse macroeconomic conditions, 2022 to 2023 is set to be our best year in terms of revenue, growth and profitability. At the time of releasing its FY21 results, which was delayed by at least 18 months as Byju's adopted a new revenue recognition mechanism, the company had said that it clocked 10,000 crore rupees in revenue for FY22 unaudited. That's a 4x jump over FY21. Now, while the top line guidance is strong, all eyes will be on the bottom line after record losses in FY21. As fresh funds come in, Byju's has once again reiterated that it is on track to achieve group level profitability by March 2023 as it lays off 5% of its 50,000 strong workforce, consolidates all K10 India subsidiaries under a single unit, retargets marketing budget towards overseas markets and reduces the feet on ground. Now, robust businesses can weather any storm, says Nikesh Arora of Palo Alto Networks. The former SoftBank executive was the key driver behind the Japanese firm's India investments, including Ola, Snapdeal, Oyo, Grofers, among others. Shireen Bhan was in conversation with Arora and several Indian startup executives who all believe the long-term potential for emerging businesses in India remains strong. Take a look.
One thing that has stood the test of time, you build a strong, robust business, you can weather any storm that comes your way. You could be unlucky that you're building a robust business and there is no capital in the market to be had. I still believe there are phenomenal sectors in the Indian economy which are well served with technology and automation than with purely the labor force that we've always had in this country. So I think all those things are in the right direction. It just means that any entrepreneur who was looking for a quick exit at a lofty valuation is going to go back and have to work hard for the next 10 years. The sellers still have indigestion. I don't think the sellers have quite realized that the world is now different and they're not going to see those valuations for a long time. I think the entrepreneurs who raised money at a high valuation still haven't run out of money. I still believe they have a bunch of money in the bank. So I think entrepreneurs aren't ready to sell at a lower valuation yet.
A pretty positive place to be if you can really prove product market fit, you can prove solid unit economics, and demonstrate that downstream with scale. I think scale is the biggest problem, right? How do you scale profitably? That's the problem statement that a lot of startups can address very interestingly at this point in time. But at the same time, capital is going to be starved. I think we are going to see a year where the amount of influx of capital this year will be a fraction of what we saw in 2020, 2021, which was pretty insane, if I could use that word.
I think this is the greatest moment next 8-9 years for India and for Indian startups. The way we see it at Paytm Money, for example, is a capital market player. And I'll just give you a few examples. India, I think, is just getting started, right? So today, leading brokers, top 10 people would do anywhere from 1 million to 7-8 million transactions a day. I think that's going to explode to 50-60 million, right? And that explosion is about to happen. As that explosion happens, technology is going to get really tested in India, because the way we talk about technology, the way we talk about security, we talk about it in isolation, right? But India to go from a 5-7, like we do 1 million trades, for us to go to 50-60 million trades is a challenge on technology. But I think that's the greatest challenge India is geared towards and Indian startup founders are geared towards. So I really feel that while the world is in this washing machine, we figured our way to get out.
Well, logistic players are seeing nearly 40% growth in the run-up to Diwali as demand returns with a bang. For players like Shiprocket, growth is being led by Tier 2 and 3 towns increasingly coming online and new segments like D2C, gifting and cross-border shipping picking up. Shilpa Ranipeta caught up with Akshay Gulati, the co-founder of Shiprocket, and started off by asking him about the growth in order volumes this festive season. Take a look.
I think the last month has seen a growth in demand. Obviously, demand has grown almost 30 to 40% compared to the previous month and the averages during the year. Normally, I would be honest in saying that you expect almost a 70 to 80% increase during the festive season. I think this year it's going to be around 40%, which is slightly lower than previous years because we see a lot of offline opening up. That's what we're hearing as well. And I think this year is the true new normal, as I would say, where we have a lot of shoppers who are shopping online, and there's a permanent conversion to people doing their gifting online, to people buying online. But a lot of people who were shopping online only because they were afraid during the pandemic, that demand is back offline.
That's interesting. And Akshay, run us through Shiprocket's prep to handle the festive season rush this time in terms of enhancing warehousing capacities, hiring. What have you done?
So exactly some of the things you mentioned, right? We did all of them. So I would put a checkbox against all of those. I think for us, the guiding principle, both from a customer perspective as well as a platform perspective, was that more sellers wanted to enable 1 and 2 day delivery on the platform. I think that was the guiding factor and the feedback that we had before the festive season. So what we did was obviously we very aggressively expanded our warehouse network across the country. We have over 40 plus warehouses now, and made sure that everything was adequately staffed, whether it was permanent or temporary workers, with the aim that we should store our goods closer to customers and we aim to deliver a majority of the orders within 1 to 2 days.
And also, are you seeing gifting picking up significantly this year? And what trends are you seeing on that end?
It is. And I think for us, we have a unique lens on the D2C segment for gifting, especially because we're one of the largest platforms for D2C brands to sell online. Ship online and fulfill online, not really sell. And that is, we're seeing tremendous growth in that part. A lot more people are now buying gift hampers for corporate gifting from D2C brands. Traditionally, there were a lot of FMCG and offline brands that used to dominate this space. And I think for the first time, we're seeing a lot of demand go towards D2C brands now.
And in terms of geographies, which areas are you seeing that are really picking up in terms of shipping? Any areas that particularly surprised you?
There is a lot of demand as well as supply now coming from Tier 2, Tier 3 cities, both in terms of sellers from these cities going online and shipping to customers nationwide, but at the same time, obviously, a lot more demand coming here. Cities like Surat have become a very important part for us, both from a demand and supply perspective. It's in our top 5 cities, especially from a supply perspective for the first time this year. And cities like Kolkata, you cannot call it Tier 2, but where a lot of the demand traditionally it was not a hub for us for demand. This year, cities like Kolkata are also becoming more important. And what we're generally seeing is that Tier 2, Tier 3 is becoming a much larger component of our overall business. And it's a trend we've seen almost uniformly throughout the last 12 to 18 months, that a lot more demand as well as supply is coming from these cities now. And for us, there are new segments and new markets that are now opening up. For example, we just got into cross-border this year. And cross-border orders during the festive season is something that's been a revelation for us. And we definitely see a lot more demand from customers overseas now for Indian products.
Akshay, you mentioned macroeconomic scenarios earlier. I wanted to understand from you, what has been the impact of the inflationary scenario? Now, fuel prices surged earlier this year. I do understand now the impact has cooled off, but did you happen to pass on any of those hikes to the customers? What's it like now for you?
So I think we saw a lot of that inflationary pressure from a logistics point of view in the early part of this year when crude oil hit an all-time high. And so I think for us, it's been fairly stable and normal in the last 4 to 5 months. But the first half of this year did see those costs, some of them being passed on to the end users as well. But the last 4 to 5 months have been pretty stable. And I think prices have also been pretty stable as far as logistics are concerned. International it's a whole different kettle of fish, right? Because international flights you weren't getting a lot of cargo space earlier this year. If you wanted to ship overseas, that has obviously opened up. But again, international freight still tends to be high and tends to be more volatile. But on a domestic front, we're seeing cost stability, at least for now.
And any interesting trends that you can tell me in terms of categories or shopping habits that you've seen this time?
So I think the standout for us this year, and I'm going to go back to the point around the Tier 3 cities, I think the standout really for us this year has been the number of sellers we've seen, not just tier 2 and 3, because we combine those terms very often, but specifically from tier 3 cities, I think we've seen a lot more people selling online from these cities. And I think generally as a category, personal care is really expected to have a tremendous growth this year, both from a D2C perspective, as well as an overall gifting perspective from what we're seeing.
All right, Gitex Global, UAE's largest technology and startup event, was held at the Dubai World Trade Center from the 10th to the 14th of October. Now, this event threw a spotlight on some of the world's most innovative tech entrepreneurs, which are working in sectors like metaverse, artificial intelligence, Web3, blockchain, cloud computing, financial technology, as well as big data. My colleague Aishwarya Anand brings you the key highlights from this event.
I'm here at Dubai's Gitex Global 2022, the world's largest tech showcase. This year, the exhibition saw participation of 5,000 companies and 800 startups. Of this, a robust participation was from Indian exhibitors, with over 200 Indian companies taking part in the event. The Gitex is not only providing startups an opportunity to showcase their innovative solutions, but is also helping them connect with potential clients, investors, and partners.
Gitex this year is the biggest edition of Gitex in its history. We have a significant increase in number of visitors, significant increase in number of companies that are showcasing here. So we have this year about 5,000 companies that are participating in Gitex. Over 200 are coming from India. And this is positioned to be the largest technology fair globally. So we're very excited as Dubai to be hosting this event, organizing it for so many years, because technology is really at the core of what we are trying to deliver in Dubai going forward.
We are a D2C brand, just we raised a fund, and it is really nice to showcase our product in the Middle East market. Actually, we are planning to launch our product here only. So yeah, it's feeling really nice, meeting with a lot of new people, investors.
Certain offerings that we have, some of the dental offerings, some of the cosmetic offerings, we found there will be a good clientele for that in the UAE market, and we've already done some pilot projects. So we are using Gitex as an opportunity to expand into the Middle East and North Africa region, MENA region.
We're working on smart factories. Dubai is a very, very huge market for us because, of course, there are a lot of petroleum refineries that are there. The Gitex event, we have got some phenomenal response from here. It is one of the biggest technology events in the world.
We are based in California, and we make drones, and we bring the best drone in the world to this event. And we bring to this event a very special camera. This is an OGI, optical gas imaging camera. It can detect gas leak. Visually, we have a lot of traffic.
NASSCOM brought 32 deep tech product startups across various verticals to showcase the tech innovation happening in India. NASSCOM envisions Indian product industry to be at $30 billion by 2026.
NASSCOM has brought in a delegation of 32 deep tech startups to be here at Gitex. See, as we are, everybody knows we are the third largest ecosystem when it comes to the startup world. And for us to be here is to promote the deep tech startups. And as product product startups, we are poised for a growth of 30 billion by 2026. And market access being one of the biggest asks from deep tech startups, right? And that's the reason that we are here at Gitex. And we strongly believe that with our tagline of world class for the India, world class for the world and for India, I am sure that for our startups to be here in terms of their market access, their connects, and we are going to solutionize for the world and for the decade.
Metaverse was another big theme at the Gitex event. Diverse industries from gaming, retail, fashion and sports are looking to explore in Web3, with Dubai Metaverse strategy envisioning more than 40,000 new virtual jobs by 2030 in the Emirate. Can you take us through the growth opportunities that's emerging from the Metaverse and AI technologies in Dubai, and how is the government propelling that growth?
So let's think about growth first in Dubai and why Dubai is the right place to be and why the UAE is actually the place where the whole world is flocking in Gitex, right? Gitex today is the biggest tech event in the world. It has people from 90 countries coming to showcase their best, their brightest, their most innovative technologies, and individuals as well. Now, what makes the UAE the right place to launch Web3 technologies, launch metaverse companies and others, is the fact that the infrastructure here is cutting edge. It's the fact that you can access talent from around the world, from 200 nationalities. It's the fact that you're able to work with every time zone from one place on Earth. And also the fact that you're able to localize the content to whatever geography you're aiming for from the UAE. Because of the diversity of talent, you can create localized content for India, for Africa, for Asia, different countries in Asia, for the US, for Europe, for Latin America, from one place. It saves you time, it saves you money, and allows you to dominate globally from one place.
On that note, I do want to add one thing. Can you tell me that, what is the percentage of talent that you're seeing coming from India when it comes to the metaverse and the AI space?
India has historically been an incredible partner for the UAE, incredible partner for business, an incredible partner for talent, an incredible partner as well for just scale, right? Being able to scale to India or scale from the UAE to the world is an incredible thing as well. We're seeing a huge inflow of talent. Naturally, you're going to see a good percentage of that being from India.
Currently, Dubai is home to more than 10,000 small and medium-sized businesses. The MENA region has received $2.6 billion in VC financing last year, and UAE claims to be leading the way. Now, with venture capitalists looking to future secure their investments in the face of rising global economic concerns, the possibility for entrepreneurs to be raising capital is like never before. With camera person Balbir Singh, Aishwarya Anand for CNBC-TV18.
Welcome back. Now, NPCI International Payments Limited, or NIPL, the international arm of NPCI, recently announced a partnership with European payments company Worldline to enable Indian tourists to make payments in Europe via UPI and RuPay. Incorporated in 2020, NPCI's international payment arm is devoted for the deployment of RuPay and UPI outside of India and engaged in building a payment acceptance network overseas. To talk about NPCI's plans overseas and how Indians can benefit from NIPL's recent partnership in Europe and more, joining me now is Ritesh Shukla, the CEO of the company. Ritesh, a very warm welcome to you. Well, Ritesh, let's talk about your partnership with Worldline. It's been much in the news because you've signed the MOU, for tourists to make payments using UPI and RuPay in Europe. Now it's time for the implementation. Give us a sense of the timelines to begin with. How soon can these payments be made using UPI in Europe?
So, Worldline is the largest merchant acquirer in Europe. They have a footprint of about 1.1 million merchants. And the markets that they kind of focus on are France, Belgium, Netherlands, Switzerland. These are some of the big markets from our outbound tourism perspective. So we are looking at, enabling acceptance of UPI-powered apps to begin with Worldline partnership, wherein, our consumers from India using different UPI-powered apps will be able to scan the QRs at merchant establishments and make payments. So that's what we are looking at in terms of timelines. I think we are looking at closure of agreement in next couple of months, and then we get into technical discussions. And depending on the speed from both sides, I think it will be a couple of quarters before we go live. So that's what we are targeting. And, we are working very closely with them. They also realize the importance that India today represents globally. We are already the 5th largest economy. And I think as per the recent IMF report published last week, we will be 3rd largest in next 5 years or so. So there is a lot of merit in collaborating between us and Europe, and Worldline is going to be a very, very strategic partner for us in this regard.
You're starting with Belgium, Netherlands, Luxembourg and Switzerland. For the rest of Europe, would it take longer, or will all of Europe be covered in that 3 to 4 quarter timeline that you spoke of?
So it'll be a gradual rollout. Our focus is going to be in the countries that you mentioned, and please add France to it, because that's a very, very important market and also very, very strong market for Worldline. And apart from that, we are also talking to various other players in the market. And, QR is very, very new to Europe. The deployment doesn't exist as much as it exists in the Asia and India in particular. So this is a build from ground zero.
Yeah.
But we are working with various players who have plans to, play a role in the QR-based acceptance space, or who have existing deployment in the QR space. So we are working with both people who are currently present and people who plan to be present, and we will, make sure that in times to come there is, seamless acceptance across Europe for QR-based payments for UPI-powered apps.
Okay, Ritesh, yes, this will help make payments a lot more seamless for Indian travelers. But what about the cost angle? Because in card payments, typically, card companies charge a foreign currency transaction fee. Credit card companies add another percentage to it. So the fee could range from 1.5% to 3%, even more. Of course, it ranges from card to card. I know while UPI will not be setting this, but if you could give us a sense from an industry point of view, how transacting via UPI is going to compare to, say, Forex cards and credit cards that Indians currently use when traveling overseas?
So Ritu, as you know, NPCI is a B2B company. We don't directly connect with consumers, but our effort, as you said, is to make it a competitive proposition. So we are going to work with the overall ecosystem to ensure that there is convenience in terms of the simplicity of usage. There is benefit on the economic side, and there is also, the use of more cutting-edge technology, which is mobile at the front of it. So we are looking at, adding value across three, streams that I mentioned, and we'll work with the ecosystem and players in India in particular to ensure that, there is value for consumers as well economically when they use UPI-powered apps.
Ritesh, what next for, your overseas play? You have various partnerships across countries. Currently, how many countries can Indians transact in using the UPI? And, what are the expansion plans for other countries, if you could share with us?
So technically, for UPI acceptance, we are live in 3 markets, which is Singapore, UAE, and Bhutan. And we have also announced earlier, this year we had announced a partnership with Liquid Pay. With them, we are looking at gaining footprints in a lot of Southeast Asian markets, which is again, these markets are again very, very relevant for Indian tourism or tourists going overseas. So that's one. The other is with Worldline. We are looking at gaining footprints in the European market. We have also started discussions with players in North American market, but currently there aren't any existing QR code deployments. So we are working with partners who are looking at it in near future, because given what UPI has achieved in India in terms of I think it adds a lot of value across the ecosystem, and with QR deployment, everybody who stands to play a role in this will help us acquire new flows, that is displace cash, and get more people on digital rails.
Well, Ritesh, we wait to hear that. But thank you very much for your time on CNBC-TV18 today. Thank you very much. A pleasure speaking with you, Ritesh. On that note, we're going to wrap up this edition of Startup Street. Thank you for watching, but stay with CNBC-TV18. The news continues.